Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. On Friday, the Australian dollar bulls viewed an opening and took the opportunity to rally as the US dollar weakened. With the dollar index rejecting the 95 level, the Australian dollar rallies now to take on the challenge towards the region of 74 cents, with the resistance seen currently at 74.60-65. Support on the day at present is seen at 73.55. Tomorrow we do have the RBA to announce its rate decision. It is widely expected that the RBA will keep rates on historic lows and therefore expect to see no change at 1.5%. But more to the point is what the statement says. With the Fed looking to hike rates 4 times this year, the RBA will eventually have to change its status on its views and therefore, or should I say its sentiment, and therefore we could see a little bit of a tone coming through to a hawkishness, which could actually drive the Australian dollar slightly higher, but nevertheless towards 74.60-65, I view the market will start to shorten and take the opportunity from this region. As I mentioned, the dollar index did actually plummet, and this has now pushed the euro back towards a region of 117.20.30. It is viewed from there that the market will probably again reject this level, and I do expect to see a market tumble back towards a region of 114.85. This week we do have the non-farm payrolls at the end of the week, but more importantly, the market will be focusing on the tariffs this week as it starts to heat up with the trade wars against the US and China. So the market will be looking at the fact that the US is looking to impose 25% of tariffs on $34 billion worth of imports. No doubt this will cause some friction in the market and a little bit of whipsawedness, so just be careful whilst you're trading. The bullish view for the next coming 12 hours should hold towards 111.10. As the market is near enough upon there, is the fact we could see a break up towards an extension of 111.65. Overall, though, the market is still retaining its bullish traction, so I expect to see the dips to remain shallow. The pound actually escalated to a further height on Friday, rejecting the level of 130.65, which now brings the focus back towards 133, which is the region that I was looking for not so long ago with this bullish outside range day, but nevertheless, it has restored from the rebound, and I do expect to see the market continue on. It is interesting that we are still seeing slight weakness to gold, but safe haven is only just around the corner. I feel the market's going to actually start staging more demand into gold, not so far away. So I'm looking towards the bottom side of the range around 40 as a buy, and I do expect to see a rebound very, very soon. Like with silver, I expect to see $15.80 to hold and stage a rally back towards the top side, and therefore could see a move back towards a region of 16.20 to even about 16.40. So buying dips towards 15.80, still a buy. Well, we got a surge on Friday in oil, but it seems to that's got slightly dampened after President Trump said on Saturday that the Saudi Arabian King Salman had agreed to his request to increase oil production, maybe up to $200 billion barrels a day. Therefore, this could actually see the retreat from the November 2014 highs and look back towards the region that comes in around $70 a barrel. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day and a great start to the new week.